All right, so we got our manipulation day trade. So today was expected manipulation because yesterday we had accumulation. It just didn't look all that great. Looking on the high time frame, what did we do overnight? We created a weekly cycle with ES, inverted the new weekly opening gap. True day open was a devil's mark because we didn't even tap into this 4 hour. Start with the high time frames here. Actually, if you were paying attention to the last video, we had our draws and liquidity, which I'm not going to remark, but they were right here and here. So those were taken overnight. I was a little sad to see that because those were my targets for short for today. So what was I looking at? This is our 10 a.m. candle right here. I was looking at a tap into this to send us lower, but we in fact didn't get that. So instead, what I was looking at was our 1 hour, 15 and 5 minute. So looking at our 1 hour, there technically is no reason to come back up into here if we're closing and creating a bearish candle on this. However, it can come up, so we're going to need some fractal time frame alignment. In that, we have right here with ES our 15-minute PSP. High 15-minute PSP. I actually think I may have been wrong on this because this is a right here. So this is our high, a bearish candle. Our high of this was a bullish candle. So, okay, yeah, I wasn't wrong. It just was a bit awkward because these 3, 4 candles, usually a PSP is a 3 candle move. So this high and this high, they were basically a swing divergence between these two. So this 15-minute swing divergence, we'll put that as SD. Swing divergence was my sweep to send lower. And let's take a look at our AMDX cycles. So high time frame, right? We go on the day. We have to go on the 15 minutes. Sorry about that. It is an AMDX accumulation, manipulating lower. This is definitely manipulation because the leg is just so long. Distribution and expansion. Honestly, this could be an AMDX. It's just playing out so strange today because all of our draws and liquidity were basically taken out overnight. And really, this is my only target for the day. This was what I essentially wanted to hold to, but because we have that 1 hour low right here and we have the low of the day right there, I decided to trim because it's more likely that this will be taken out at a later time. So coming down to the 5 minute right here, if we just take off the noise, my entry was right here. Why was that? Because we had a 15-minute gap that we were inverse and closed under in that same time. You see right here, we had this gap, 5-minute inversion. In the optimal trade entry, we have technically a swing divergence. I'm not going to call it a PSP, but we had a swing divergence on the 15-minute and also a 15-minute SMT in our manipulation. So what I was looking at was regular trading hours. I love regular trading hours. I think it's slept on a lot, and I want to keep it that way because it just means I have better entries than everyone. Totally not true, but it gives you great entries, is what I'm saying. So, dang. Okay, so the thing is, with regular trading hours, it messes up your quarterly theory cycles, but that's kind of the least of your worries. So, if we're going on regular trading hours, what am I looking at? I'm looking at the quadrants. So, you can see if we're looking at both ES and NQ, sadly, we're going to have the noise up of my... Okay, let's just do that. I think it's fine, just looking at this. I want everything to be visible, though. There you go. Okay, so true day open was the high. I knew that since this is literally like a 300-point range from our open 250 point. So I knew that that was unlikely to get filled. True day opening, if you have a devil's mark, then I'm looking for continuations lower. London high was in the upper quadrants of the new daily opening gap, and really I was referring to ES because ES had the new weekly opening gap inside of our daily opening gap. So 50% on ES was the discount of our overnight range. That's what this bar is. Same with this right here. That is consequent encroachment. We have London high above that, and we have initial high right a little bit below where our discount range was. So when we didn't hit either of those, and we were creating 15-minute structure, like literally to the downside. Look at this. 15-minute structure just off of open. We had a swing divergence right here, off of open, regular trading hours, and then from there we're just moving down. So I was being patient, waiting for data. I want the best entry, and you can see the 5 minute in here that we did wick up from, I mean, it was sloppy. This 5 minute didn't close clean, but I was looking at ES for the like clean in the lines movement. So going back to electronic trading hours, let's get rid of these quadrants because I've already explained it. And yeah, so quadrants it definitely makes the charts look a bit cleaner once you take those off. But I do like to have them. So let's get rid of this PSP. Technically, I think it is a PSP because this high is bullish while that one is bearish. They're not exactly the same. Like, it's hard to tell. Very hard to tell. I would consider it swing divergence paired with PSP because of that four candle movement, but PSP is a three candle move. So debate. There's a debate in my head going on about that. Anyway, coming down into our 1 minute entry. 2 minute didn't really give me much from the day. We didn't even tap into this 2 minute, and it just wasn't really giving me much other than this gap that we were expecting. So I did use that, but since we were trading into the optimal trade entry, I really had to narrow it down to the 1 minute and the 30 second. So right here, we have our 10 a.m. open. Let's just put this as our 10 a.m. low. And on ES, we have our 10 a.m. low right here. So from this 10 a.m. low, I ended up trading off of this inversion. You can see my entry is right at 10 a.m., that candle. So I entered here, short position, stop loss here, about 30 points, which is kind of ridiculous. I probably should have sized up. I was in 4 contracts and we hit a total of 130, like 128 points. So $1,000 on the day. My total target was the low of the day and technically this low. But really, I had all my limits at 188 points. It was so it was like right above there. So technically, yes, we did. We were looking at the low of the market, and this is our 15-minute reentry that we'll talk about in a minute, right here. So what am I looking for? I'm looking for an optimal trade entry in. Dude, I keep on putting this on backwards. I'm looking for the optimal trade entry in here if we're retracing. So I ended up entering just because this is our low. We created our high, created an inversion in the optimal trade entry with all these paired confluences that's actually I want to show you on the 2 minute that we aligned with our distribution right here with our 90-minute and our microcycle. So like I said, I mainly use the 90 and micro. I do use the daily. Like for the direction, I use this weekly cycle SSMT to verify that I am bearish. And right here, sorry, okay. I'm a little lost. There we go. So right here, we have our XMD. Honestly, coming in like right here, I was a little bit unsure because this kind of looked to me like an AMD X when the 30-minute was opening and we could possibly move higher. But if we're creating a devil's mark, then yeah, we're just going to move lower. So XAMD, I was looking at this as manipulation in the like into discount or discount of the regular trading hours new daily opening gap. So that was my manipulation. That's what I saw as manipulation, and we just didn't really create much of a manipulation. So after that, coming into distribution right here, I saw after this inversion in the distribution microcycle, moving into, you can see where we start to drop aggressively in the 90-minute distribution cycle. And I thought that this was going to be accumulation because we're just in the middle of the range, but it ended up to be an expansion. So the microcycle expanded. After that, I knew it was going to be accumulation after that, so I wanted to exit really about here because I was already up 4R. So going to the 1 minute chart so we can see the clear price action. We're going to take this off, the optimal trade entry. Off of this 5 minute, I was expecting for 1 to 2 minute to hold. It did not hold, so that was kind of making me a bit, not anxious, but I just wanted to exit because I was up a lot. So this 1 hour low got taken. I exited a little bit below that, 1 contract. I should have exited 2. I was only 4 contracts, so I just wanted to pay myself for the risk, which was perfect. 1 contract was like $300 at this price. And then I exited the other 3 slightly above it when we were moving into this because technically we do have this low that we can take out, but I just wanted to exit because it was an emotional exit, to be honest. Completely honest, it was an emotional exit. But tapping into this 5 minute would have been a great reentry and even a confirmation to hold because this 15 minute just swept. And did it create a PSP? I don't think so. No, it didn't. But the 15 minute was swept, and off of that, you would have had a relatively low stop entry paired with the first presented, because the first presented is always a great way to take an entry, continuation, or reversal, and it helps you lower your stop. So you could have a stop basically above that high where the first presented basically got disrespected both ways. So off of that, that could have been your short. It just got so choppy all of a sudden. So lucky I did get my exit where I was. Like I said, it was about right here at the total exit. I was looking to hold it to the low because of the first 30-minute PO3, or the 30-minute PO3, because we didn't take this low and it wasn't a 90-minute SSMT and we only create a microcycle SSMT. This was a very short move. It wasn't high time frame correlated. And so when I saw that our 10 a.m. was open, then I knew that our likely target was going to be this low because it's the low of the day and it's likely to create some sort of SSMT. And really, I'm not even paying attention to YM or what YM's SSMT is doing because it's just so messed up. It's trading in a range for like the past 2 weeks. So I ended up closing on the 5 minute because of this. I didn't like how this wick just went to 50% of that after sweeping. I thought it was going to come up and trade back into the range, which is what we're doing now, but after we swept the low of the day. So it was completely valid to hold your position through this. This was a small 5 minute retrace. I just got emotional off the fact that it was creating structure that I just didn't like so close to my exit. Like we were just 20 points away, and that exit ended up being 50 points less than what I was looking for. See, this is discount of our previous week's range, so that is a major point of selling to get out. And we were in the bottom range. So I'm happy about this. It was a 4R trade. It could have been 1.58 or sorry 5.8R, and it would have been a lot better. But there's always instinct and emotions that you're playing with outside of what's happening on the charts. So I'm thankful that we got the trading day that we did, and I was confident enough to hold this through this kind of weird chopping session. So that's really it. Not much of a recap today. 10 a.m. wasn't honestly the cleanest initially. I'll tell you, I was looking at longs off of this because we rebalanced the range. We were coming in. I think that 10 a.m. was going to move higher and then short some, but even a long in that can get you 100 plus points if we're going to London high. So plus our new weekly opening gap and our true day open was in that area. So we had very good reason to trade into the 4 hour for value gap that was up here, as I mentioned before, for our 10 a.m. PO3 and the new weekly opening gap, right? Because we have discounted the range right up here on ES. So completely valid to wait. But after I saw that our 10 a.m. range created an inversion right here above, in the premium, I wanted to enter in that premium because the stop was so low, and I'm not frustrated, but after seeing 30-point stop, I should have went in 5 cons instead of 4. I'm just used to the small amount of risk because, in all honesty, I was so bad with my risk for so long. Like there's times that I would be trading one contract because I couldn't even stand being in drawdown, or like the amount of risk on the table, even if it was like $100. So I'm still trading 250 to 300 risk, and we ended up taking 4R. And so over time, I will be sizing up, especially when I have funded accounts in a good buffer zone. So it's gonna definitely accumulate with time. But what's most important is your executions, because it doesn't matter how much you size up. It matters about the executions and your RR and your consistency, right? I have great executions. My RR is half the time more than 4 or like 4R plus, and the other half it's 2.5R, 2 to 2.5 to 3R. So I do have these great technical skills, but emotionally I just can't go in with 10 cons, right? I couldn't go in with a mini here. Even though it is a 30-point stop, I just psychologically I could not enter with a mini and get this kind of return because I would just be so emotional, and maybe I wouldn't be emotional because I've learned a lot over the years, and now I'm holding these trades, but it's gonna come with time. I'm not in any kind of place to rush it, so we'll just see how I progress with time. And really today, this was the only clean move of the day, unless you got in an entry in somewhere in this area. It was very quick. 90-minute PO3 or 30-minute PO3 on 9:30 open was not all that nice because we ended up sweeping really low. There was only one chance for entry, and this was a 70-point stop. If you had it at the balance price range on the second chart, it would still be like you probably get a pretty bad fill too because of these aggressive candles. So it was like 50 plus points of risk to like 1 to 2 would be something that we didn't even hit. So I didn't want to take the 30-minute PO3 just because of this messed up my whole risk model, and 10 a.m. Creates a better range most of the time because you're trading in a smaller range inside of usually the 30-minute PO3 that we're either going to continue higher from and then reverse soon after, or we're just going to like go lower from and continue higher, which honestly we might do. So that was my trade for the day. It was 128 points. We're like consistently getting over 100 points. That's also because of the volatility in the market, but we're having under 40-point stops, and that's what I love to see. So I hope you took a decent trade today, at least part of this move. Still, I was at a 1 to 2 buy right here, so that would have been a completely valid trade. But if you're in a high time frame move and you know it, then you got to learn to hold it because that's where the real money starts to rack up when you get in those high time frame moves and you know how to hold. So, with that being said, I am getting off the charts. I made breakfast, had a winning day. I'm scaling my funded accounts. I gotta fix my computer because I broke one of the keys trying to clean the goddamn keyboard. But anyway, it was a decent day. 15-minute continuation. This was very tough. I'm gonna be honest. It stalled for about a candle, or actually no, it didn't really stall. It was just really slow delivery on that 15-minute. So you could not move your stop to break even. You would have to have the full risk on, which is all right. Or you could move your stop here if you got in at this sweep. You would move it to this candle high, which is usually where I put my stop losses in general, because there is no reason really to trade into that candle, especially if the sweep is at 50%, which it's like exactly at, right? So that's what I would have done if I would have traded that, but it just wouldn't. I would have been in before that, honestly, because that's like if you miss the move somehow. But anyway, I'm gonna end the video. Take care, everyone. 130 points. I want to get a 200-point trade. My max is 130. Sorry, 300. It was like a 6 hour trade or something like that. It was ridiculous. But anyway, that's it for today, and I will see you tomorrow for distribution. So with that being said, let's see if we can get another big trading day. We'll see. All right, everyone, take care. Bye.